I believe Charlie Munger said that we're going to wish we had Volcker in our times. Does he mean inflation is going to get out of control? So for those of you not familiar with Charlie Munger, that is Warren Buffett's right-hand man. And Volcker was the head of the Federal Reserve in the United States in the early 1980s. Now, interest rates in the early 80s were close to 20% in America. It was crazy. And the reason why interest rates were so high was because inflation was out of control, way worse than it is right now, way worse. And so Paul Volcker, who is the manager of the Store of Money in America, the head of the Federal Reserve, what he did was he flew to Germany in the early 80s, and he met with Helmut Kohl. And he asked Helmut Kohl in Germany, at the time the chancellor, for advice on how to control inflation. And the reason that he asked the Germans was because after World War II, the Deutschmark went to ridiculously high, the supply of Deutschmarks increased materially, and you had to literally take a wheelbarrow full of cash into the market to be able to buy a loaf of bread. And it was great advice that he got. He had to raise interest rates. Now, that's the only way you can control inflation. Things are a little bit different right now. And let me explain what that means. I have lots of props here. So this here is a piece of the Berlin Wall. And I remember I worked at a hedge fund called Citadel. Dr. Alan Greenspan, who used to be the Federal Reserve chairperson, he gave us a speech. It was an awesome speech. And he said, the reason why we had unprecedented economic growth in the 1990s was not because of technology stocks or technology companies. It was because the Berlin Wall fell in 1989. And what happened was when the Berlin Wall fell, you had millions of cheap and brilliant Eastern European labor moving west, moving to Western Europe. And the biggest input into the price of anything you make is the price of labor. And that's why we had incredible growth with relatively low inflation back in the 1990s. Now, I think that the 80s was a little bit different than today, because today's generational version of the Berlin Wall teardown event is Amazon Web Services. And let me explain. So Amazon Web Services was created in 2005 by Jeff Bezos. And the reason why Bezos created AWS or Amazon Web Services, and Andy Jassy is the new CEO of Amazon. He created that department in Amazon. The reason why AWS was created was because every holiday shopping season up to 2005, Amazon servers would crash. They couldn't fulfill all the holiday shopping needs in November and December every year. So they created 9 massive server farms across the United States. And they called that Amazon Web Services. And they'd have all these computers on. They'd light them up around Christmas time so they can sell more stuff. And then every January, they'd have to take a lot of them down because there wasn't much demand for them. And they started actually renting that space out to other companies. Now, Amazon has cut the pricing point on Amazon Web Services as a platform. They cut the pricing point more than 100 times since they launched AWS 2005. Compare and contrast that with Microsoft, which up until recently only cut the pricing point on Windows 3 times going back to the 1980s. And as a result of cutting the pricing point materially on Amazon Web Services, what happened was a lot of companies could be founded, and the cost of tech for them was nothing. Netflix runs almost entirely off of Amazon Web Services. So does Uber, so does Airbnb, and many other online companies. And so this generation's Berlin Wall teardown event is Amazon Web Services. And because of price discovery and AWS, there's great pricing discovery online, right? You can find lower prices and the cost of infrastructure is lower as well. And so do I think we're going to have 1980s style inflation again? No.